What's going on, everybody? It's your boy C-Zar, and we are talking about RGS at the request of Dr. Mike and the boys. Hit that like button, subscribe if you want to see more content like this. Let's get into it. Let's move on right here. So looking at this here on a daily basis, and I know that there's some fundamental things that you were talking about there, Dr. Mike. I didn't have time to go over them. I really didn't have time today. Maybe I did somewhere, but kind of a family day today, so I really didn't have time. But I will look into that more. Fundamentals are always, I think, important to look at. But looking at the technicals here from a high to a low, broke above your 886, broke back below it. The fact that you're below your 786 to me would call for an idea that you'd move down to your 618 before moving higher. Absolutely, I think you want to move higher. Just are you ready to right now? Right now in the sense of like this month of August, not before the end of the year. Before the end of the year, absolutely, I could see you working for prices that are literally near $70, $90 even, right? Absolutely. But by the end of this month, you could be closer to $15 or $20, something like that. There's a lot of things for support that go on down here. First off, again, from this high to low, your move that took you down here to your lows, of which you sprung off, your 618, your golden ratio, is right there. It's also the previous area that you tipped right here for resistance. Also the previous area that you tipped right here for support and found support back here. Somewhat significant area. If we flip the script, which it's going to be the 382 because that's just how it is. 618 and 382 are at the opposite ends. It's also from a low to a high here, your 382 right there. How did he know that? Because this high is right here. Right? It's basically the same high. This low is the exact same low. If you flip any fib over, the 618 is basically right where the 382 is always. And it makes sense from a mathematical standpoint because 61.8 is pretty close to 38.2% less than 100. 382, 38.2% less, right? You take 100 minus 38.2, you're left with 618, right? So at least I think that's right. Yeah, 618, yeah. So they're inverses of each other. I don't know. You flip it, and it's where the 382 is. So significant in the sense that it's the 618 here. Significant that it's the relative 382. Of course, it would be. Also, just on a price perspective, finding resistance and support several times throughout its history. It wouldn't be crazy. It wouldn't. You had a humongous pump. It's so common, so very common to pull back specifically to your 382 after a pump. And not always is the 382 right where your 618 is. Not always are you going to go up to the exact same highs on moves like this. But in this sense, it is just validating or giving more emphasis on the support area down there. You might even front run it. You might not quite reach that level, which is even more bullish. Maybe you hit it exactly. But you're at 2150 now. You're at your 236. It's less common, it's extremely less common to find support on your 236 and move up than it is to move to your 382 and move up. But it happens. It does happen. You probably consolidate a little bit more and then move up. Time would tell, right? If we hang out in these areas without moving down for at least another couple weeks or so, I might be inclined to believe that you don't move down here and that you do move up. But I don't think it's going to be this week or nothing and then it's off to the races, personally. I could be wrong, but that's just my personal opinion. Looking at your weekly RSI, as of now, you do have a lower low, relatively speaking, right here. Low to low, lower low, with a low here to a higher low. So that is hidden bullish divergence, but only as long as this weekly close remains above this. If this week you come down, you happen to close below this week, well, this is no longer hidden bullish divergence, but it's bearish convergence. And looking at the weekly RSI in itself, it does look top heavy. It does look totally healthy and fine, even if it went all the way down here, because you've got these higher lows coming into play. You did break this downtrend here, right? Coming back to test the resistance points of that downtrend wouldn't be a bad thing at all. Somewhere down there. I don't think this converges, but it converges way over here, and I don't think it's going to be February that you start to move up. I think it'll be sooner. But just worth looking at. Again, maybe what you do is you do find support on this top line. You don't go down here. You could, and it would still be fine even if you did, right? But the difference being essentially is just where you close. Perhaps you wick all the way down here next week or the week after, but then you close up higher. So then it wouldn't reach as far down. I don't even think, truthfully, I don't think he'd reach that lower trend line anyways, but it's there. It basically is there to say, hey, if you go lower than the 382, you're still fine. You're still postured perfectly. You're still getting a higher low. You're still healthy. But my expectation would be that you find support at this 1520 area, which is a little bit lower than you are now. Now let's look at some other time frames and see if that makes sense as well. Daily RSI looks sad. Very strong, but sad right now, rejecting the 50, pointed downwards. Makes sense, right? Generally speaking, whenever you see the oversold zone or the overbought zone and you break below the 50 or above the 50, right? Oversold, broke above it, broke back below it, broke above it again. You went to your overbought zone before ever going to your oversold zone again, right? Now you're breaking below your 50, you might go to the oversold zone. I don't know if that makes any sense, but like basically, you know, like this, oversold, went up to your 50, but you rejected it, you got oversold again. This time, you broke through your 50. You didn't just reject it, you broke through it. You didn't get oversold until you got overbought, right? And then you got, I don't know if that makes sense. It's just something that I've observed. I don't know how to word it properly, but essentially breaking the 50 is a big deal, especially when being overbought for this long, because it generally would imply, whether you move up or down or whatever, that you're not going to see this overbought zone again until you get into the oversold zone, making it an impending target that you're going to achieve. And looking at the way that you're pointed right now, you're basically like, you know, up in the middle here on this cliff from this one magic day of pumping. You're probably going to have a little bit of a harsh correction down to your 382. And that totally makes sense, man, because that's also at the bottom of your gap here. Like, you could go right below the 382. Like, I really like that. I would say $14 to $15.30 area, and still leaving the option open, of course, to find support above it, because you could get front run, right? There could be so much attention on this area because there's various means of support right there beyond just the 382, trading algorithms, people, whatever. Market makers have their eye on it. Too much buying pressure, can't even get down there. But I'd say anything from, really, I might even adjust this parameter a little bit more. Yeah, I'd say about 14 bucks. 14 to 15.50, somewhere in that zone. I think it's moving down. And then after that, we can talk about higher prices. First down, and then potentially up. But time will tell. That's a lot of volume that came in, definitely at a significant level. I mean, at the all-time lows, right? The next up area that I would feel comfortable calling for would be from a high to a low, $68 to $94, maybe even higher. Maybe. But time will tell. Anyways, that's all I got, guys. Hit that like button. Subscribe if you want to see more. I'll see you on the next one. Bye-bye.